So what do I mean? Let's say that the IRS legally has 10 years to collect. Surely you've done the math. If you haven't, 72 months is going to be about 6 years. So if you can pay it off in 6 years, the IRS is not worried about you running out that collection time. You don't have to turn in financial information if your debt is lower than $50,000. And again, if the debt's under $25,000, your tax account probably isn't going to be assessed for a tax lien. But if it's between $25,000 and $50,000, it could possibly be assessed for a lien. They do reserve the right to issue a lien, but the lien is going to almost be guaranteed if you don't do a direct debit installment agreement. Yeah, the lien is coming.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey family, I am so excited to be in the podcast studio today. Today, we are shooting episode 10 of Tax Relief with Timalyn Bowens. And you all know that I like my stats and facts, so let me share with you real quick why that's a big deal. So, Apple Podcast is the biggest podcast platform as of right now, and they have about 2 million podcasts on there. 26% of the podcasts on Apple only have one episode. And guess what? 64% of all these podcasts have fewer than 10 episodes. And it's not me saying it. You can actually go find it by Amplify Media. They did a study. But when you run those numbers, which of course you know I did, that means 1,280,000 sorry, I was about to say dollars. 1,280,000 podcasts haven't even made it this far. But guess what? We did. Not me. We did it because you decided to rock with me and tune in and listen to each of these episodes. So thank you. And you know what? As a way to say congratulations to me, it would be amazing if you make sure that you were following Tax Relief with Timalyn Bowens on your favorite podcast platform. Now, before we get into the meat and potatoes of this episode, I do want to give a disclaimer. You know, in the springtime, I suffer from being allergic to Kentucky outside. In the fall, I don't know what the deal is, but my voice likes to go away anywhere from a day to 2 weeks. So I'm trying to work through that right now, so bear with me a little bit. The show notes are going to be awesome, just in case you can't understand what I'm saying. It's not going to be due to taxing these. It's going to be due to me not having a voice. But because this is such a special episode, we are going to talk about installment agreements. How do you set up an arrangement with the IRS when you can't pay in full today? So make sure you have your pen and paper, because we're going to cover what an installment agreement is. We're going to cover how you can set one up if you owe less than $50,000. And then we're going to talk specifically to my people. You know, you folks that owe 6 figures or more, because there's light at the end of the tunnel for you too. So let's get right into it. An installment agreement is a payment arrangement between you and the IRS. You can set this plan up if you are a qualified taxpayer or authorized representative. An authorized representative is going to have a tax power of attorney, similar to what I do for my clients. And you know what? I actually don't even know why I said similar, because that's exactly what I do for my clients. The authorized person actually steps into your shoes and does the negotiating on your behalf. If you are the qualified taxpayer or authorized representative, you can set up the payment plan. So a few episodes ago, we talked about tax compliance. A qualified taxpayer is compliant with no returns missing and making payments on the current tax year. So if you are a W-2 employee, that means you have money being withheld from your check right now. If you're a business owner, that means you are making estimated tax payments towards the tax year that we are in right now. Make sure that you check out episode 8, where I dig a little deeper into that second phase of tax relief, the compliance part. So, you've heard me talk about the guaranteed installment agreement on previous episodes. If you owe $10,000 or less, have no missing tax returns, you haven't defaulted on a tax plan the past 5 years, and you're in a position to pay in 36 months, you may qualify for a guaranteed installment agreement. So let me go over those qualifications again. You owe $10,000 or less. You have no missing tax returns. So if you haven't filed 2020 yet, you haven't filed 2021, this isn't going to be the plan for you. You haven't defaulted on an installment agreement or tax plan in the past 5 years. That means if you've had an arrangement with the IRS, you made all of your payments, you made them on time, and they didn't have to come look for you again. And you're in a position to pay the debt off in 36 months. Chances are very likely you can go set up a guaranteed installment agreement right now. If that's you, you need to stop whatever you're doing while you're listening to this, because I know you may not be taking your notes yet, but whatever you're doing, stop that and go grab your copy of the Guaranteed Payment Plan, How to Guarantee a Payment Plan with the IRS. It will walk you step by step through setting up a payment plan with the IRS, and you'll be good to go before the day is over. You can get that on my website at www.americasfavoriteea.com. Now, if that's not you, don't worry, keep listening. First things first, if you set up an installment agreement with the IRS, you are going to pay interest. And if they haven't been removed, you're going to pay penalties too. But that won't be you, because you listened to episode 7 about tax transcripts and you already know how much you owe in penalties. You're just waiting for episode 11 in 2 weeks when I teach you about IRS penalty abatement and getting those removed with Form 843. But right now we're in phase 3. We're in the negotiation phase. You can apply for your payment plan by paper on Form 9465, phone, or online. Just a heads up, the IRS is still backlogged, so I wouldn't recommend filing anything by paper. However, if you still need to file your tax return, Form 9465 can actually be filed electronically with your tax return. And guess what? Because you're here with America's Favorite EA, on my YouTube channel, I actually walk through that form and how to fill it out. Now, when you set up an installment agreement, there is a cost to setting up the arrangement. You're going to pay $31 plus any interest and penalties accrued until the balance is paid. For low-income taxpayers, they may be eligible to have this fee waived. Now, $31 may seem like it's not a lot, may seem like, it's going to hurt a little bit. The fee is $31 only if you have a direct debit installment agreement. This means the IRS has your bank information and they're going to take it out each month, and they're going to take it out of a bank account or take it out as a payroll deduction. This direct debit method is required if your balance is over $25,000. And you may be thinking, Timalyn, I don't have a bank account, or I do everything on blockchain. Well, guess what? You have the absolute right to not make payments by direct debit. When I say it's required, it's actually for your benefit. When you owe over $25,000 and you don't do direct debit, the IRS is going to file a tax lien to ensure that you don't try to run away and keep on not paying them. In addition to issuing that tax lien, you're also going to pay a higher setup fee. if you set up a payment arrangement that is not direct debit, we call that non-direct debit, you're going to pay a fee of $130 plus any penalties and interest accrued until the balance is paid. For low income, you're going to pay $43. Now, as I've said before, the IRS, they are not out to ruin your life. However, if you don't get this payment arrangement set up, they will. If you do actually qualify as a low income taxpayer, you may actually be able to get the $43 back. And when I say back, they will take it and then apply it to a payment. But that is a completely different episode. Now, when you set up this payment plan, you also want to make sure that you do everything correctly the first time. Because guess what? Just like there's a setup fee, there's a revised payment plan fee. If you have your address wrong and need to correct it, it's going to be $10. If you close your bank account and need to put a new one on, it's going to be $10. So you want to make sure that you go through your paperwork thoroughly, have it correct, because nobody wants to pay additional fees when it could have been done right the first time. So you owe more than $10,000. We're not doing a guaranteed payment plan. You owe more than $25,000. That's okay. If you can pay the debt off in 72 months in full, that is called a streamlined installment agreement. Now, remember when we talked about the tax transcripts? You want to make sure that if the CSED, which is the collection statute expiration date, if that's after, no financial information is necessary. So what do I mean? Let's say that the IRS legally has 10 years to collect. Surely you've done the math. If you haven't, 72 months is going to be about 6 years. So if you can pay it off in 6 years, the IRS is not worried about you running out that collection time. You don't have to turn in financial information if your debt is lower than $50,000. And again, if the debt's under $25,000, your tax account probably isn't going to be assessed for a tax lien. But if it's between $25,000 and $50,000, it could possibly be assessed for a lien. They do reserve the right to issue a lien, but the lien is going to almost be guaranteed if you don't do a direct debit installment agreement. Yeah, the lien is coming. If you owe over $50,000, you can still set up an arrangement, but it isn't as easy. You will be required to turn in financial information. And that's when we start getting a little invasive and people get uncomfortable. In the episode where I talk about tax relief, in that negotiation phase, I talk about the form that you fill out. It's a 433F. They want to know where your bank accounts are. They want to know account numbers. And if you owe $100,000 or more, there's still redemption for you too, but it's going to be even harder. You all are my people. The IRS is going to want to know the name of your firstborn, your mother's maiden name, and your blood type. Well, maybe not all of that, but they're going to want all the information about your investment accounts. And a mistake I see a lot of people make, they'll open a business and think that it's safe. But when you turn in financial information to the IRS, they want to know about those business assets and accounts too. And when I say assets, I don't just mean properties and houses. Again, they want to know about investment accounts. They want to know checking account numbers, the bank name, the bank location. But don't worry, because we can still get this behind you. We'll use IRS Form 433F to show them how much you can afford to pay. Legally, not hiding anything, giving them the information that they want that will satisfy them and not bankrupt you. So you will want to make sure that you use your transcripts to ensure you don't pay what the IRS can no longer collect. I know this may sound like a lot, but you've got this. Now, if you are sweating profusely, have a knot in your stomach, and feel like you're going to faint, don't. Because, really, you've been with me now 10 episodes. You already know who you're talking with. You're talking with America's favorite EA. I'm here to fill the tax literacy gap one taxpayer at a time to make sure you stay educated on the process of what's going on. But I don't just teach this, I actually do it, right? I do the work. If you already feel faint of heart and you know you're in that category, this is not going to be a streamlined plan. You're going to have to turn in the financial information. And even though you listen to the podcast where I walk you through the phases of how to do this, you're like, absolutely not, no way. I want you to go ahead. The link is going to be in the show notes. You need to fill out the application to see if we are a good fit to work with each other. Because ultimately, remember, back taxes shouldn't ruin your life. If you have those feelings of nausea and things now, they're ruining your life right now, but we can still get that behind you. I'm still pretty pumped about this being episode 10. So at the moment, I feel like I could probably talk 50 more minutes, but I don't want you to be overwhelmed with this information. If you need to listen to this again, I want you to go back, take notes, but before you start, breathe. We can work through this together. And if you found today's episode valuable, go follow Tax Relief with Timalyn Bowens on your favorite podcast platform. And be sure that you share it on social media and with your loved ones, because 1 in 50 taxpayers have an IRS issue, and you never know who it is. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family, because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.